Good afternoon, ladies and gentlemen. Jeremy Johnson, Journey Home Realty, back again with part two of our March monthly market update entitled Define Reality. And as I left off on the last video, I was telling you, and it was also a point we brought up last month, what is the biggest challenge in the market right now? And it's not the interest rates, it is the lack of inventory. As you can see in this slide here, over the last 7 Februaries, as I said, the data comes from February, but over the last 7 Februaries, you can look at active listings for sale are down 47.4% over the last 7 Februaries. And you may ask what drove that. And as you can see, it was all pre-pandemic. We were up in the million listings per February. And then a bunch of people came to the market, as we talked about again last month. Low interest rates, purchase houses. We had more reasons we were at home more often, wanted to upsize, downsize, whatever the case may be. Well, the growth of the house, or growth of new builds, which we'll look at in the next slide here, couldn't keep up with that pace. And you see it depleted our inventory. So which has created what we're in today. Have been for the last couple of years is a seller's market because it's a supply and demand issue. But I'll tell you good news. I always try to leave you off on good news. As you can see, this February of 2023, we are actually up 40% from last February. So there's hope there. And all of this is what's keeping the housing prices up. Next, I want to show you a slide here. As I talked about a minute ago, I kind of alluded to was, you obviously already have your single family homes that are built, and that inventory is lower, but not as low as the new builds. As you can see, over 52 years, 14 straight years, we were below the average of new builds. So just in 2023 did we finally get back to the average. So that obviously it took a big hit on the actual inventory that buyers are capable to buy, meaning less inventory, less supply, still a demand for it. It's what's kept the housing prices up. So we hear a lot about other individuals, whether you're buying or whether you're purchasing, is, hey, I'm going to wait this out and house prices are going to drop, or sellers have a fear that their house prices are going to significantly drop. And I'll tell you, from the peak of the market last year, June of last year to December of 2022, only average, if you look at 3 different data sources, the decrease or depreciation was only 1.77. And I say only lightly, but it was 1.77. You're watching the news, and we told you before, it's highlighted different, big drops, and they grab a quarter, or they grab a, couple, 6-month period or whatever, and it just is trying to show you how tumultuous it is. But it was 1.77, as you can see in this slide, is the depreciation over the peak of the market in June of last year to December. So what I will tell you on this, and we hope that you get out of this, is that the interest rates are not the biggest issue, as we talked about in part 1. We just got to ride that out in the 10-year yield, and that gap needs to get a little bit closer. But as we continue to get after new builds, and more builds are being built, and inventory to get closer to our 50-year average, we should see the market start to level out and and level out and create less of a supply and demand, and kind of get back into, maybe a little while before we see a buyer's market, but kind of level the playing field. So again, this part 2 was to point out and define in reality that we still have an issue with inventory. And then you got to also remember too, as I talked about last month, that you got buyers sitting in houses that have 2.25, 2.3% interest. So there's not a real drive to get out of those. So as that kind of levels out, we'll start seeing more listings on the market, or if you're needing to sell your home, and we can add more houses to the market, that'll help out that situation. So I hope that helped out. We'll finish off with part 3, which is going to be, should I buy or should I rent, which is a question that we get all the time. So we'll hit you up on part 3 on the next one. Thank you.